You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. Oops, I gotta turn that computer lower. We are live, so if I goof like that, it just shows that we're live. So guys, I get on here every day the market's open, 11 a.m. Eastern time, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I've done nothing but trade my entire career. Moved out to Chicago. I grew up in New Jersey, moved out to Chicago because I knew that I wanted to trade on the exchanges. It was always like a fantasy of mine. I went out, I traded on the Chicago Mercantile Exchange, I traded bonds on the Chicago Board of Trade, and then I learned how to trade options on the Chicago Options Exchange. But again, I've done nothing but trade throughout my entire career. Now I get on every day to hang out with my good friends, to say good morning to everybody, and literally to try to add value to you any way that I possibly can. We do something special here when we have good trades. We like to celebrate those with a glockenspiel. A glockenspiel sounds something like this. One day I'm going to learn how to play that glockenspiel, and I will be playing that loud to celebrate these wonderful trades. We're going to talk about divergences today. We're going to talk about steel and aluminum. We're going to talk about divergences. Divergences is just pair trading. It's trading one thing against something else. We don't bet on whether Coke's going higher. We look at the value between Coke relative to Pepsi. Okay? That's like the basic thing. It's like a Blockbuster taking market share, Netflix taking market share from Blockbuster. If you see that coming, you can invest in Netflix, you could short Blockbuster. Those are pair trades, those are divergence trades, and those are what we're going to talk about today. So let's go to the screen. I got a whole bunch of slides prepared for you guys. We're going to have some fun. I got the questions open. Feel free to ask any questions you'd like. I will make sure that I get to each one of the questions. Let me start here though, because Chris is our lead editor, and we have a Discord community for all of our paid up members. And June 26th, a new advanced notice trade comes out in Unity software. We're going to buy the 26 strike calls for the best price available. Last trade was $1.55. Well, Unity this morning, those 26 strike calls that were trading for $1.55 just about 1 week ago, those and $155, okay, per one lot. You could buy 10 and it's $1,550. Right now, those 26s are trading $3.90. So 155 turns into 390 in a very, very short amount of time. When we do that, my friends, that is what we like to celebrate with a good old glockenspiel. Denny was able to make 200% or $2,000 on his Unity trade. John, he's got his first free ride. Nice. He's got 2 Unity calls up 123%. Denny here as well makes about $1,000, 146% and 200%. So thank you guys. I love when you guys share these things. I don't want to get on here and boast, but once in a while, I got to boast. Okay, the big news this week is going to be the tariff deadline. Okay, July 9th, some of the tariffs have already been settled. There's a lot of tariffs that have not been settled yet. But right now, there is going to be uncertainty in this industry. Option traders, we are looking for volatility. Volatility provides opportunity. So when the stock market gets hit and when the fear index, the VIX, spikes, that's when traders get really excited. And this week, we should see some good opportunity in these aluminum trades. So let me walk you through what we're looking at. Here are going to be the companies that are going to be the most affected by July 9th tariff deadline. Get my pen here. We have 5 US companies. X isn't really tradable anymore, so kind of forget about that. We really can't trade that. And then MT, 1 foreign national. when we look at an industry like this, we don't look at them as individual stocks. We want to look at them as one complete industry. So if we go to a chart like this, and I take you back to 2021. If we start all of these names together and we say, on your mark, get set, go. They start trading, right? Well, the pink gets very expensive relative to the others. Looked like they were all strong, but Alcoa really, really outperformed the others. So a trader may see that and say, you know what? Maybe we should bet on Alcoa going down and we can bet on the other ones going higher because Alcoa seems to be outpacing those. These are the divergence trades that we look for. X here. This was a good trade between X and Cenx, CENX. X gapped up. Eventually, CENX caught up. X actually ended up trading off. Well, now X is done. X isn't really tradable anymore. STLD, this might be expensive relative to the others, but look, all of the other ones, they sure seem to be catching up or trying to catch up. The overall message is we want to look at things as an industry. We don't want to look at things independent from each other. So here are the 5 stocks. I took out X because X is dead. X is trading like this. Government owned, so forget about that. But what we want to look at is these other 5 companies. Let me move this away. And here's what I do. I like to look at the market cap. Let's get my pen working again. I always want to look at the market cap because the smaller companies are going to follow the bigger companies. This is your international one, MT. Then you have NUE, STLD, AA, and Cenx. Implied volatility and historical volatility. Historical volatility is the volatility that it's traded with historically, just like it says. So historically, STLD has the lowest volatility. Historically, AA has the highest volatility. So there's going to be some more uncertainty about AA than there is going to be about STLD. You'll notice the larger market cap names, these 3, also have the lowest historical volatility. Why is that? They're the most mature companies. As companies mature, the street market makers, analysts understand those companies better. So there's less volatility. There's less risk of the unexpected. Now you have these down here, the smaller market caps. Those are going to trade at a higher historical volatility. Why? Because they're going to be more volatile. Analysts and market makers, they don't know as much about those companies. Even NVIDIA, there's a comment except for NVIDIA. And let me just, I'll bring that up right now because it's a good comment. It's not really on topic, but NVIDIA is not trading with a high volatility. It's not. It's 40%, 38%. Okay, if you want to find high volatility, you have to go to names 37%, 38%, all of that. But when you look at some of the names that we cover, K-TOS we talk about a lot, right? K-TOS is trading with higher volatility. These are younger companies. QXO is a builder that we like. QXO is trading 62%, higher volatility, more uncertainty. So what can we do though? We have the end of Liberation Day, I guess we can call it. We're going to see volatility in these areas. What can we do? Well, what looks most interesting to me is these two. Implied volatility, I didn't explain that, I'm sorry. The implied volatility is the market's volatility. The implied volatility is how the market is pricing the options right now. So if I do this and we look at Sanks, sometimes we call this thanks you very much, only on good trades. Sanks, 68%, and you can find that right here, 68%. Historical volatility is 40%, 0.4. So right now, Sanks is trading well above historical volatility. Grigor, that's going to be a ChatGPT question. How is implied vol calculated? There's a formula that, it's really interesting, guys. How is volatility formulated? So how volatility is formulated, everything is given. You need the price of the stock, you need the interest rate, you need the volatility. Did you know in all of options trading, there's only one subjective component to pricing options. Everything else is objective. So if you look at options, and we'll look at Sanks. When we have good trades, again, we like to call him thanks you very much. CENX. If we look at CENX, in order to figure out the volatility, you need the strike price, you need the stock price, you need how many days until expiration. There's only one subjective component in how to price options. Does anybody know what that is? What's the one thing that traders need to figure out in order to price options? Everything is given to you. Every single thing in order to price an option is given to you free from the market. There's only one variable that the trader needs to figure out. What is that? What's the one variable that a trader needs to figure out in order to price options? And I'll tell you, options have historical volatility, right? That's what the volatility used to be. The implied volatility is what the volatility is right now. There's also the theoretical volatility. The theoretical volatility, that's my volatility. I'm a trader. My volatility doesn't have to be the same volatility that's in the market. My volatility for Sanks, implied volatility is 67%. Maybe I think that volatility should be 63%. That would be my theoretical volatility. The overall takeaway is the only subjective component of option trading is volatility. Volatility is uncertainty. That's what we need to figure out. That's why option traders, you need to understand volatility. Volatility is the expectation of movement. Right now, Sanks has the most expectation of movement relative to the rest of the steel and aluminum tradable stocks. Now, does that mean Sanks is expensive? Potentially, maybe. That's what we're going to talk about as I move over to my all access group. Hop on live because I got one more thing that I want to cover. Overall, though, our YouTube channel, we're getting a lot of people come over for QXO, for TMC, for Katos. So we're going to continue to cover those stocks. But overall, look for divergences. Don't look for individual winners and individual stocks. Look for those sectors that are really going to be moving. This week, sectors, automobiles could be affected by tariffs, and watch these steel and aluminum stocks. Those are going to be the ones that are really in play. Everybody in our all access, you guys sit tight. We'll be right back. Thanks everybody for watching.